So before I get into the findings, I just want to give you a few notes on how we actually collected this information and how we managed the study. So one, we wanted a large sample. Our goal was to get over 150 public pension funds in our sample. We collected 163. We wanted to compare private equity returns from these pension funds to the other asset classes or investment strategies that they invested in, such as public equity, fixed income, et cetera. So to do that, we collected their CAFRs. Mainly the data came from CAFRs. Some came from quarterly reports because we're trying to have the returns as of June 2017. And then we had a couple of words of direct communication with the pension fund. The asset class comparisons are based on the 10-year annualized return, right? So it's, we're trying to account for different business cycles within that 10-year period. And the data is also time-weighted returns, right? So typically, if you go into a database, you'll see the private equity returns and IR pensions report all the returns on a time-weighted basis, which allows for better comparisons. And the third point, we wanted to have consistent comparisons when possible. So we took pretty good pains in trying to make this data as consistent as possible. And then one note, I know this is private equity. I represent the Private Equity Trade Association, but a lot of pensions term private equity like the Europeans do. So they include venture capital in their private equity portfolio.